So I love the profit first strategy because it works with our natural human tendencies. And literally, we're going to hit submit an hour before the deadline. When my entrepreneurs have just gotten paid, the world feels like they're invincible. And it's interesting because 2 weeks later, when it's time to make payroll again, and maybe sales wasn't a great week, right? Then they're making different decisions. Like maybe that computer upgrade wasn't such a great idea, or maybe I didn't need to add that extra person to my payroll. And when there's more cash, they feel like, oh yeah, I can do this. When there's less, I'm feeling the stress. And Profit First works exactly that way. It's kind of like Dave Ramsey's envelope system. That's the closest I can come up with. And Dave Ramsey's envelope system, as soon as you get paid as a person, you have an envelope for every purpose of your life, right? You have an envelope for rent, you have an envelope for your mortgage. If you have a mortgage, you have an envelope for dining out, if that's something that you do. Maybe even an envelope for like movies, going to the movies, but you have an envelope for every purpose of your life. And so what we're doing with entrepreneurs is we're setting up envelopes, but not quite envelopes. We're going to use bank accounts because it would be a security risk to use envelopes. And we literally have a bank account for every purpose of our life. We have a bank account for our profit because we're prioritizing profit. We have a bank account for owner's pay because, too many business owners, when I meet them, I go, who's your most valued player? They'll go, it's Sarah, it's Mike, it's Louie, but they'll never say their own name, right? But the reality is if we didn't start that business wouldn't be there. If we stepped out
Right.
of that business, it would be a different business. We are the most valued player of our businesses, and we need to celebrate that. And so, yes, we need to get paid. So we're going to have an owner's pay account. And then the next account we're going to have is a tax account because the reality is, if you're getting profit, if you're getting owner's pay, I don't care if you have the best accountant out there, you're still going to owe something in taxes. So why not just set aside money for taxes as you go? And so we're going to set aside a tax account. We're going to use some tax strategy, which we'll talk about later on, so that we can reduce it, but at least we're going to have it there. So we're not sweating bullets and going, how am I going to pay last year's taxes with this year's money? Because we're going to have
Mhm.
it reserved in a bank account. And then the last account that we're going to have is our operating expense account. And what that means is after I funded my profit, after I funded my owner's pay, after I funded my tax account, what's left is available for my operating expenses. So I've created an illusion of scarcity. I've used Parkinson's law to create a limited resource versus all of my money being available to spend on new trucks, new equipment, more machines that lift things up, right? More cranes. I'm now able to now limit what I'm going to spend, what I have available for rent, for payroll, for um, different things.